to another episode of Market Masterminds. I'm one of your hosts, Chase Pals, here on this eve of the best day, in my opinion, in the history of history. I might be a little biased.
The history of history.
I might be biased.
History.
The history of history, baby. The history
That's
of the 4th of July coming up tomorrow. I know markets are closing here at noon today. We are getting things cranked out, though, over at I-10, doing a little extra work in the morning before we all head off and do our things. I know I'm going to be lakeside for the next couple days and going to be living the margarita life for a little bit. I don't know. Hamp, how are you doing,
buddy? Man, I'm fantastic. How can we not be? You know, we're through the first half of the year, getting ready to celebrate this great country's birthday, freedom, baby, America. Perfect. So good. I'm like you. We're both going south, but you're going to go a little further south. You're going Banjo south. Okay, now we can't tell anybody where we're going. We certainly don't want to offend any clients, prospective clients, or otherwise.
This is true.
But yeah, I'm looking forward to some lake time too, man. We're gonna load up. We're gonna load up tomorrow morning and make a little drive south, which will be great. Spend a few days down on the lake, get together with the in-laws and friends and cousins and all that good stuff. So definitely excited for the days ahead. Little relaxation, no doubt about it.
Our chief.
Well, travel safe, boys. I will be welcoming some family members to Oasis, the Eitenbrook Oasis, just right here in
I-10 IQ headquarters,
the friendly confines of Johnston, Iowa.
Absolutely.
But yeah, we're gonna have pool time and barbecue time and all that good stuff. So
good.
Yep.
We know how to do that here. So
yeah. For those that don't know, I mean, when Aaron hosts, it is a spread. And when it's like, oh, I need food for 6, it's like, man, go ahead and make it 16 or 26 just in case.
Every person brought a +1 unannounced. We would be fine.
Oh, and you'd have leftovers. You'd be able to snack later. You'd have something.
Well, part of the routine is then at the end, when there's still so much left, you start divvying it up and sending it as parting gifts.
Yeah.
Like, here, take some extra smoked meat home.
That's right.
Like you really enjoyed those cheesy potatoes. Let's go ahead and put that. You can enjoy that tomorrow or even later tonight.
Aaron, unless it's Thanksgiving, you're going for a record. I mean, because I've heard stories.
And no, I will not be going for any eating records.
I've heard some stories. Maybe the I-10 listeners will get a chance to hear some of those cool things at some point. We might have to do some funds, run in there and talk about some of these crazy.
That'll be for our Thanksgiving podcast.
Oh, I like it.
Yeah, we should talk about the markets or something.
Something related to people.
I mean, everybody tunes in to hear us yammer about, I don't know what, but I think they also tune in to hear us talk about markets.
That's right.
And speaking of markets, Hamp.
Yeah, we're halfway through, right? We're halfway through the year. Quick rundown. S&P up 17.24%, roughly, in the first 6 months of the year. Nasdaq 22.47%. The Russell 2000, right? We talked about that last week, and it's kind of just it's here. It's always here. Nothing exciting, nothing crazy there. 4.25% on the year. And yesterday, S&P closed record high, over 5,500 points for the first time ever. So, it's awesome, and it would lead you to think, like, gosh, man, there's probably a lot of winners out there, right, in the market, whether it's an individual investor, whether it's a portfolio manager, a professional investor. But there's so many different ways that, the pros are out there managing for their clients. And I'm going to venture to say, we kind of chatted about this in our pre-call, right? There's probably a lot of folks that haven't realized as much alpha and as much return and gain for either themselves and or their clients in what's been a crazy first half of the year. So I think today let's dive in. Let's talk about that a little bit. And again, this is an opportunity for us to educate the public, right? Why volume at price?
Right.
What differentiates, Aaron, you and your method? You've studied literally thousands of different methods.
Anything that has been foisted into the public domain as this is good, I have evaluated it and dismissed it as, in fact, it's just marketing hype.
Yeah.
In fact, yes, somebody got famous writing a book on it, but that guy never made any money using it.
He made book money.
Yeah. So, you talk about performance, first half performance for the index, and like you said, first half performance for a lot of these managers or portfolio managers, investors in general. And this year is no different than a lot of years in that most portfolio managers will have underperformed the S&P to date, and will underperform for the year. That has been a consistent thing year after year after year, that active managers underperform the passive indexers, and the battle of placing money with someone who's going to manage it intelligently versus just saying, you know what, I am just going to buy an index,
Right.
because it always is I'm going to buy the S&P 500 and I'm just going to ride it. And especially this year, a primary reason why the managers who are making portfolio decisions and not just simply indexing have underperformed is because that those mega cap Magnificent Seven stocks have been the leaders that have driven those index returns. The Nasdaq's, what'd you say, 22%, the S&P's 15%. Those mega cap stocks pushing those indexes higher. And the more diversified away from those stocks, or diversified away from just pure indexing, the more that those investors, those managers are going to underperform. And that's 100% true this year. So what do you do about that?
Yeah, what do you do? What's the next?
So first you make a conscious decision that you're not going to play a game where you're going to invest based on narrative, invest based on
opinion.
Diversification. If you study diversification, there's no diversification, there's appropriate diversification, and then there's over diversification. And if you look at the performance and or risk mitigation that comes through diversification, I will bet the majority of folks, and especially even in the professional space, don't understand how soon appropriate diversification becomes over diversification, and you lose any potential for outperformance, and you actually lose the risk mitigation that you gain from the initial diversification. So I would say most portfolios are run with a highly over diversified mix. But why is that typical? That's typical because a lot of these allocators of money and runners of money that use in the days of the world go place their money with, they don't have an alternative manner by which they can expect to outperform or expect to do a good job. They're effectively following a buy and hold methodology, an always long methodology, with whatever suits their fancy, whatever is a house recommendation if they're affiliated with one of these wirehouses like Merrill or Morgan or Wells Fargo Advisors, or pick your brand,
Right.
and they allocate to these portfolios or to managers that are running a fund that is diversified in that way. And all they're really guaranteeing is that they are going to buy a giant swath of garbage losers or do nothings. And then they're going to get some of the winners. They're going to get some of the hot hand ones, and they're spreading it very wide. But net, what does that result in? It results in underperformance to SPY, underperformance to what they could be doing if they were able to pick out and selectively invest in a few of those winners with only as much diversification as mitigates risk and allows for outperformance by picking those winners. And volume at price, the research that we do, the sector focused research, and following those indices, so that from a trade location perspective and a trade timing perspective, you get on the right side of the right things and you stay on the right side of the right things, and you move and pivot when the market or those things tell you that it's time to move. And it's the big money that tells you when to move.
Right.
Yeah, and I'd say to that too, right? I think there's something here, right, to delineate. It's not that people aren't winning, right? And it depends on how you define winning, right? If I've made more money, right? If I look at my holdings and I've got a plus sign in front of whatever the percentage is that shows me how I'm doing, some people are happy, right? They don't want it in the red. They don't want that negative, right? And that can be considered a win. I've got one of my self-managed accounts here that I'm looking at. I've got 16 holdings in it. I've applied VAP, volume at price, right? Know when and how. When's the right time to get in? When's the right time to get out? And I have 15 out of my 16 holdings that have a plus sign and green. The 16th one, just so you know, I'm down 0.07%. And I have to imagine, that's going to change, right? Because I used your methodology. I've watched the rotation. I know where it's going. That's why I bought it, right? Plus 23.33% on the year. I'm outperforming where the markets are. I'm outperforming S&P. I'm outperforming Nasdaq.
Yeah. You have alpha, Jeremy.
I have alpha.
It's like the AOL. You have mail. You've got alpha.
Absolutely. I'm going to go to my other account.
You make that a button. We can make this a show to where there's like sound effects. And you just you're the MC on the keyboard and
sound effects.
So then you hit the button.
All right.
Oh boy, here we go. Yeah, and visual effects. There you go. Sound effects and visual effects. You can make the AOL. You've got alpha.
You've got alpha. But the point I'm trying to say here, right, is it's not hard. It takes some time. It takes some energy. It takes some effort. You have to learn.
Learn a little.
Absolutely, right? I since joining forces here, man, the Aaron University classes that we've been privy to, it's been super helpful. And I think that's one of the things. The point I'm trying to make is for anybody that's out there that's like, I think I know what it is.
Right.
Maybe you really don't know what it is, or you have some high level knowledge. We're happy to spend time with anybody that is curious and wants to learn. As a matter of fact, you recently put out a survey, I believe out on LinkedIn, and said, hey, if I were to offer this, what would it look like to you? What would be meaningful? Is it one-on-one? Is it group session? And the intent, right? We're not trying to hold the keys to the car and just like the three of us drive it. man, the more we can share the wealth and loan the car out and have people win and truly win, right? Like win big, the better.
Yeah.
There you go. I like that analogy. Loaning out the car.
Yeah,
We'll loan out our car to anybody.
loan out the car. Hey, you want a long term?
We're
Right?
good
You're gonna have to buy it.
People
Right? Like,
will
you're
loan
gonna
out the
have to
car.
pay. It's the same thing. But
You need to drive your portfolio higher. Here, take these keys. Take these keys.
Yep.
You can drive it higher.
And we do that. We give some nuggets, right? We've got a multi-layered subscription platform out there, so there's some free content that's out and available. There's two different tiers. You can go up to our elite package. I figure this is a great time. Let's plug, right? Celebrating the 4th of July, as we kind of talked at the top. We are running a special. We're going to run this through the end of next week, so through the 12th of July.
Yeah, 12.
20% off either subscription model that you choose. So you can do our monthly. You can go into our elite package. Obviously, produces and provides you more content, more access.
Yep.
But here's the cool thing, right? It's something that and you put out the message, and it's, if you buy it at that 20% discounted rate, that's your price for life. We will not raise your price. We're not going to come in next year. This isn't bait, switch, none of that. So you buy it at the discounted rate.
Oh, check this out.
There you go.
Here, Hamper.
There it is.
This
You're
is what
going to
you got.
get this. This is
At
it.
the July special, get a 20% discount forever.
Forever.
That's
Yeah,
crazy.
it's
As IQ celebrates America. I put that in
Yeah.
there for you, Chase.
Well, I appreciate that, because
yeah. So take advantage, right? Lock it in and see exactly how volume at price analysis can help you win, can help you outperform, can generate alpha, and lock it in. Here's a fiscally responsible opportunity.
There you
well,
go.
it's the only thing worth investing in over the
Well,
week.
I will say, for anyone who is on the fence and thinking about this, the same kinds of things that old Jeremy has, that has driven Jeremy's performance and given him some alpha. There's a couple more that are just waiting to be sent by yours truly, and I'm probably going to issue these after the 4th. It might be on Friday, it might be on Monday, but we got a couple additional ones coming right down this. It's like a baseball player that knows how to hit a fastball right down the middle. You see it coming and you take it up over the left field fence.
Let's go.
Unless you're a lefty, and then maybe you pull it over the right field fence. But that being said,
Baseball,
there's a couple coming right,
lakes,
coming
and
right down through the center strike zone. And if you don't know where to even look to see that, then all the more reason. Like I said.
Well, I think that in the market right now, there's just this there's this glazed effect with a lot of people when they hear, volume at price. Well, I'm not sure what that is. I don't understand it. To Jeremy's point from earlier, reach out to us. We'll dial it in for you, help you understand it. We did it just yesterday. Aaron and I said to the customer yesterday and dialed it in for him. And the longer that we talked with him, the bigger his eyes got. And the more engaged he was at understanding what it is. And what happens is there's this shiny little objects out here that we would call technical analysis that are just that. They're shiny little objects, right? Volume at price is consistent, and it drives, it tells you where the market is going based on the market, not based on anything else. And
well,
I think
you said something that I think is important, Chase, in that and this is something that as an individual investor you should do, and if you're a portfolio manager, you should be doing this against and for all of your clients. You look at where and how you're performing versus a stock market that is going up, and like Jeremy says, if you're opening statements and you're looking at things and you can see that it's green and it's a plus, but it's not as big of a plus, or you're lagging, and you're not winning to the tune of even what these stock indices are doing when they're going up, then the next time and that the markets turn lower, the next time we go into something where now everything's not going up, not the leaders, not the whatever, now it's going down, this is where a lot of people suddenly become interested in what I do, because guess what? The stuff that I put out continues to stack pluses and greens.
Yep.
While other things are stacking losses of small and large degree. And then there's a huge difference. When everything's going up and everything is rosy and things are on the upswing, it's easy to be complacent. It's easy to get complacent about the fact that, I'm making money, or I'm making money for my clients. But if you have no way of understanding how to identify when that environment has changed, what to do when it's time to get defensive, and knowing what are the thresholds of risk and the timing to make that kind of a move, you will be sunk the next time we have the indices drop 10%, 20%. We've seen it. We've seen 30. We've seen 40 in not so many years back.
Yeah. Yeah.
So that's another reason that, capitalize on these times and prepare for when things turn, because they always do.
Yep. All right. I love that. That is so great. I got a call out. Favorite 4th of July food. What is it? I want to know. I know what mine is. So I'll just start. Mine's a good grill burger, like an old Coleman grill, charcoal, there's just something about picking that up off, slapping it on the bun, throw a little lettuce, tomato, a little ketchup on, and onion, and just hammer that. That's my at the lake go-to. We've got a little Coleman that's on the dock all the time, and so we're just throwing stuff 24. And I'll send pictures to you guys when we're down there this weekend. So that's mine. That quick little burger with a nice cold drink. So good.
Okay. Nothing wrong with that. I've been really fortunate. I've got family up in Northwest Iowa. We always go up there over the 4th of July, have since I'm a kid, and do a big family get together. They've got this awesome concert venue that's up there. It's a free concert, bands upon bands. I mean, I've seen the Allman Brothers. I have seen Aretha Franklin, Casey Musgraves, just a wide variety of folks. But one of the best parts is I've got an uncle who has 3 different smokers, right? He's got the Green Egg, he's got the Traeger, and man, the meat sweats. I know you boys are suckers for barbecue. Sometimes we take that little trek north up to What You Smoking, and I watch you guys eat in an obscene amount of food. I tried to keep up one time. I failed.
It was a mistake.
Yeah, but I'm going to say, out of all the things that he does, man, 4th of July, I love my Uncle Jeff's ribs.
Ooh,
nice.
Yeah.
All right, that's money. What you got to use?
Well, I know that the easy default answer is something to do with ice cream. So
that's what I was gonna say.
Another podcast, another time.
It kind of goes without saying. But from a substantial food perspective, I will also piggyback the hamburger thing, Chase. However, the special nuance that I'm throwing in there is that I got a little setup and a get up in the back on the deck, whereby I can make smash burgers, and I've worked out a process. It was an experimentation process.
Of course it was.
I have it dialed in. And so like when you go to a place and get like a amazing like double smash burger and it's got that dark like crisp just on the edge part, whatever else, I can do that just like nobody's business, and I stack them. Like the last time that I did this, I took a
Can we
picture.
guess? Can we take a quick guess? Over under how many patties he had on that burger?
Ooh.
I'm gonna set it at 3.5.
You're going to say 3.5? Ooh.
Well, that's where it's at. You got to pick the over or under.
I'm going to say over. I've seen this dude put food back.
Well, so this was the first finished product.
Dang.
But if you look close, you see that little dark around the edge right there. That's the classic why, what makes a smash burger a smash burger. It's got to be cooked that just right way. It starts with the ball, and then you do it on the hot, and then you do the smash. And then you get the thing, and you're doing a bunch of them. Like, it's easy to, if you're trying to get this figured out, it's easy to make a smash burger. What the tricky part is, and where you need the process, is when you're feeding 8 people and you need to make 8, 9, or 10 smash burgers, and you need them to all be kind of ready at the same time, and all the other things. I've got this all dialed in. This is what's going to happen at my house. So I'm excited.
Your burger process seems a lot like your research process and the way you analyze, because like you can go and pick, right? You can go pick something to put some money in, and
plenty guys on Substack trying to tell you what to do.
Yeah, but
none of them are doing volume at price.
You're saying there's a better way to make smash burgers and
money
and invest.
Things that are important, I develop and test and refine a strategy so that I get the best outcome.
Yeah.
Ask me about making waffles and how to prepare and eat waffles. I have a strategy. I have a strategy for waffles. Why? Because waffles are good. You can have trashy, soggy, whatever waffles, or you can have every bite be just as amazing as the first. But it's all about the strategy of how you go about, your waffle making and your waffle preparing and waffle eating.
I love it.
That's fair. That's fair.
Well, I'm excited to also see what type of desserts Aaron cooks up over the weekend. If those of you that don't know or don't follow him on his other socials, you should try to find him. I'm not going to tell you them, but he is the ice cream king of the Midwest. There is nobody better. And there's some big names that follow him too. So, you should take a peek. Have a little
I'm going to share this piece though. I am going to give a tidbit. It's not where you can find it, but there's a great place up in Ames called Hickory Park, and it's good for locals, it's good for outsiders. But I'll never forget, Aaron, the time that you shared that story about how when you go up there, a lot of people do appetizers, do their meal, and then they're known for their ice cream up there. I mean, they're like the front side has their regular menu. Here's all the items. The back side is all of that, but in ice cream form. And you're like, I sit down and I order my appetizer, and it's this sundae or that sundae or this ice cream creation. Then I have my meal, and then I go back to that side of the menu, and I get my dessert as well. So, I mean, you're like a 2 sundae, 2 ice cream creation guy sometimes.
Yeah,
maybe not all the time.
The Hickory Park has enough great things on that menu that you can barely choose just one. And it's not beyond me to order 2 desserts when it's dessert time. But I found a better strategy is you order first dessert when you sit down and order your meal, because then it takes a little while. They got to make it.
That's
and
right.
While they're making it, you can be, it takes less time to make the dessert. So then you just enjoy the dessert and, finish that up. And then boom, your food's coming. And you do that. And then when you're done with that, then everybody's ready for dessert. And you're back on it for round 2.
That's right.
I love it. I love it. All right. Well, listen, if you've made it this far, reminder 20% lifetime discount on all of our subscription layers. So you might want to consider that. That's a lifetime discount. That's kind of a good deal. They are right. I do love this country, just like they do. I might be a little more passionate, but there's nothing better than this weekend. Please be safe. And as always, like and subscribe to the channel, share the show with your friends, follow us at i10iq.substack.com. And man, if you don't subscribe, you're missing out on alpha. What do I say? I mean, I don't know. Except for a little bit of fireworks this weekend. Let's
There
go.
it is.
There you
All
go.
of these
The
things are
visual
hilarious.
effects, man. He's in the house.
I'm working all angles at this point. All right, boys.
Yeah.
Be safe.
All right. Happy 4th.
Everyone
Happy
out there,
4th.
Happy
Fruit
4th,
Fly.
everybody.
Take care.
Catch
We'll
up next
see ya.
time.
Bye.